please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Growth is definitely ticking higher. The turnaround has come almost since the month of August.
Surprise is the core part. The core number has gone up to 5.37.
The food inflation has gone higher compared to what we were expecting.
There is an upside risk to inflation in my view.
Little bit of disappointment comes on the inflation front because we thought that the inflation could have ebbed the market.
We do see an upside to the 5.1% peak that RBI has mentioned.
I think it should be somewhat positive for the market. There should be a bit of consolidation in the near term.
Inflation apart, ticker follows tweet. Good morning, everybody. Welcome to Morning Call. I'm Lata, and with me are Anuj and Surabhi. Ticker follows tweet simply because there are two very big tweets coming from the man who is now used to running the markets on his tweets. The first one came yesterday from President Donald Trump when he said that the Syrian planes don't have to come today, don't have to come necessarily soon. And I'm not saying they're going to come too late either. But that clearly was allaying fears. The second tweet came earlier today for us, saying that the talks with China are going on very well. That very well should have been in quotes. So all is well with the world as far as markets are concerned. As far as India is concerned, all is almost well. I mean, you have to take on board the fact that the industrial growth numbers are excellent and they have been very good from August. The last 4 months have been 7 to 8%. So that has to be taken on board. And inflation you could crib a bit. Because core inflation is higher and RBI is supposed to look at that. But it has just sounded so dovish. I don't think they will be worried with 1 month going a little higher. So let's wait and see. You can crib a little about it, but I would think all is almost well. But there is a weekend and there is a resistance that Nifty is very close to. I want to hear Anuj and the technical experts on that.
Good morning, Lata. Good morning, Anuj. And it's also Friday the 13th. And Magna was doing some data, that you know what's happened. More often than not, markets have ended negative on Friday the 13th. But let's not get superstitious about it. Anuj, morning. I mean, on a more serious note, it's been a good week, right? I mean, we've crossed the 50 DMA. We've crossed that level that you were always talking about, the previous mid-March high. Today, the Qs are okay. Asia is fine. Not too much macro disappointment, as Lata pointed out. So, advantage bulls?
Yeah, advantage bulls, Surabhi. Good morning. But, it all boils down to risk-reward. The markets had a 500-point rally now from the low point, or nearly 500-point rally if you take into account the S6 Nifty's opening. But we have made a higher high for 2018 for the first time. So, my sense is now what happens is 10,427, which I mentioned as a Lakshman Rekha, now becomes support for the market because after a long time you've finally taken it out. So this morning you're likely to open above that, so maybe create a bit of a cushion here. And if that mark holds for some time, then more short covering is possible. Perhaps a move towards 10,600 is now a possibility. What's been good this month though is that both the leadership sectors have done well. The Nifty is up 3.5%. The bank Nifty is up almost 4%, IT is up 5.25%. So it's not as if, normally you see banks or IT moving. In this case, both have moved, and that's really led this secular move. The only, niggling worry is market breadth. For the last 2-3 days, the market breadth is in favor of the declines. So is this a bit of a distribution phase? I think that's something that I would want to keep an eye on. On the bank Nifty, for the last 2 days, the market has given you beautiful trades. Opening has been on the way down. Today also, perhaps because of this negative news on ICICI or, whatever, if there's negative news, my sense is bulls would try to buy that. 24,900 is the 200-day moving average, the low for last couple of days. That's your sacrosanct support mark to watch out for. Just a point here, Infosys has rallied a lot over the last 2 or 3 days, and it will come out with numbers post-market. I don't know, with stock almost at 52-week closing high, I don't know how much of good news has already been priced in, and can the company deliver something which should exceed the move back towards the previous 52-week high? I'm not that sure. So, if you are buying Infosys today, you might be taking a bit of a risk. And that might be a bit of a factor for the market today in the second half.
That may not rub off on the IT index. I wanted to put that in as well as an early morning, watch out or red flag. But HCL Tech is the one that's led from the front. I mean, I agree in terms of weightage, it's not what it is. But there is a acquisition as well that's announced. So, hopefully, if anybody has butterflies over holding too much of Infosys positions that need not necessarily spread to the rest of the IT pack. Also because dollar has strengthened. So a rupee weakness again works in favor, works as a tailwind for the IT stocks. So we could well get leadership from both IT and banks. I mean, that cannot be ruled out.
Yeah, I think as Anuj is saying, as long as Infosys doesn't come and disappoint. Most notes that I've read are talking about 6 to 8% growth for the next year as an FY19 guidance in constant currency. So let's see if they can deliver that. But that's definitely going to be a watch point for the market. On that note, let's take a look at what the wise experts have to say as we get set for trade this Friday the 13th. Sayan Mukherjee of Nomura says that their current account forecasts translate into an earnings cut of 6.5% to the FY18 forecast, implying earnings growth of 3% excluding financials and flat for the overall universe. Nomura's December 2018 Nifty target of 11,380 implies a 9% potential upside from current levels. They're overweight on financials, particularly retail, private banks and insurance, autos, oil and gas, infrastructure, construction and healthcare. They're underweight on IT, interestingly. Consumer staples is also something they don't like too much. Utilities and cement also underweights for them.
Okay, that's a tepid equity view. Let's get money market views. Bhaskar Pada of HDFC Bank says risk appetite will be back in play after the US president softened his stance both on Syria and the ongoing trade war with China. In India, he says the USD-INR should benefit in the beginning and trade in a range of 65.20, 65.35. That's more or less like yesterday. But let's see what Bhaskar has to say about bonds. He says Indian retail inflation eased further to 4.28 yesterday. This should further support retracement in the sharp rally that we witnessed in the 10-year benchmark bond yield. He expects the yield to trade in a range of 7.4 to 7.46 for today. It's a fool's game trying to guess the Indian bond market. It is not moving on fundamentals. It's something else.
Okay, well, Mangalam, let's get across and get a view of the world.
All right, so it is Twitter before ticker, and this time it comes from Trump, where he said, never said when an attack on Syria will take place, could be very soon or not so soon at all. So that's Trump's version, Russian-Syrian version of saying President Xi and I are good friends. In fact, he also asked ISIS to say, where is thank you America? Whether ISIS says it or not, Wall Street definitely says thank you Trump, because if you take a look at all the three frontline indices, they recovered in yesterday's trade, near 1% gain on all the three frontline indices. That said, Trump at White House also issued a statement which said that negotiations with China are going very well. In fact, he calls the negotiation the whole very big negotiation that we're having with China. So that subsides some fear, which was reflected in the CBOE Wix, which was down about 9% too. We'll keep an eye out on the earnings. The financials did well on Wall Street yesterday. Today we have Citigroup, JP Morgan Chase, as well as Wells Fargo reporting their quarterly earnings. Across the Atlantic, European region too saw a fair amount of green on the frontline indices, as well as the peripheral indices. What Trump's tweet did, not just for Wall Street, it also did for the Russian markets. The Russian markets, which were down about 12% until yesterday, saw a bit of a rebound from yesterday's trading session. In fact, it gained about 4%. The Brazilian index too up about 0.1%. What does that mean for Asia? Most of Asia, by and large, is in the green, and the SGX Nifty, as a result of that, indicating a start of close to 14-15 points off the high point of the day, but in the green nevertheless.
Okay, all right, Mangalam, thanks very much for that. Well, let's get you some of the big global voices as well. BlackRock CEO Larry Fink says, don't try to time this wild stock market. In an exclusive conversation with CNBC, he talks on the trade war threats, as well as says that China will have no choice but to negotiate.
You should always be invested in the marketplace. My chairman letter in the annual report, this talks about the long-termism of investing in equities. I'm not sure what inning we're in. I mean, obviously, we are late in an economic cycle. It is being extended by the tax reform, let's be clear. So we may have been in the 7th or 8th inning, if you want to put it in that vernacular, and it's extended into extra innings.
You spent a lot of time talking to foreign trade ministers
Yep.
and finance ministers. When people talk about a trade war with China, not just on the tariff side, but what do you hear from them, from the Chinese, on the other possibilities of what this could mean?
They're making changes, maybe not as fast as our administration is looking for.
This is something they've been promising for quite a long time.
And it's now happening.
And CEOs are rightfully skeptical of that, but you think that it will really happen this year?
It will definitely happen.
How do they read the tweets?
I wouldn't know.
Do you
think? Same way I read them,
But I assume that do they say we're very patient and we understand the
patient,
way?
We're the ones that have been patient. Larry, let me ask you this: so they know, with a wink and a nod among themselves, they know that some of their practices could not last forever. Do they justify that? But by them, they're coming from a different place than we are, and they got to do things for their people. And I understand that it's tough to do that. So, but they must know that there are certain things that just don't fly. And if you're talking about a completely fair playing ground, so I understand you're saying they're patient, but they know they got to come into the real world someday and play by the rules.
I had dinners in China with many of the top U.S. CEOs. Just us alone when we were there. I would tell you the practices of China were far worse, according to them, 5 and 10 years ago. Right. Indeed, many of them said the practice of the last 2-3 years, some CEOs that have been on Squawk, their practices have been totally changed. It's a much more open. And these are some tech companies. In two instances, 2 CEOs from the tech side told me that the manner in which they're operating, the manner in which they're supposed to be interacting with the domestic companies have changed. They have more opportunity to grow. So I would tell you they are seeing on the ground level, and I'm not there yet because I'm inhibited still, but these are tech companies who are there. They said they've seen changes. But directly to your question, I think they know they have to negotiate.
Okay, so some change in Chinese behavior, and that's coming from Larry Fink, a man who manages, what, over $1 trillion, so important voice. But let's get back to the local news, which is the inflation numbers, especially core inflation, coming in slightly higher than expected. The overall number at 4.28 is a modest number. A. Prasanna, Chief Economist, ICICI Securities Primary Dealer, joins us on the phone line. Good morning, Prasanna. How would you parse the inflation numbers?
Yeah, good morning. So this latest data, I would put it as a slight reversal of the trend or whatever the numbers we saw in the previous month. I think there were upside surprises in both food and non-food components. And like you pointed out, core has moved up, and even the core momentum has moved up. So our sense is that, I mean, there was a bit of softening from December onwards. Probably because of some of the cuts in GST rates, as well as because previously the prices went up after GST. There was some softening after that. That process has kind of run its course. And again, some components of core have gone up. But it's still early to say that, I mean, this could lead to further rise in core going forward. Of course, base effect means that both headline and core will go up in the current quarter. And then as was pointed out in the MPC statement, and as well as I think that is a consensus in the market also, the second half inflation, of course, depends a lot on what the government does with the MSP announcement and how it tries to implement it.
Prasanna, does the bond market have anything to worry about with the slight rise in core inflation? How do you expect the yields to respond?
Not really. Like I said, it's still too early to conclude that this is the start of, again, a fresh round of whatever increase in momentum and therefore in the YY readings also. But also, I think the bond market these days is quite dislocated. So it's very difficult to kind of see from the prices what exactly is getting priced in. So I think there's a bigger issues going on in the market structure there. So probably it's not right to look at the yield curve and try and take some messages. And this is, members of MPC should also understand that.
Yep. Oh, yes. Yeah, it's very difficult to read from macro data to bond prices. Finally, Prasanna, what about the IIP and the manufacturing number in particular? I think we are running at 7 to 8% on manufacturing and IIP for 3-4 months now.
That is right. Definitely some of it is base effect, but also I think this kind of fits in with the expectation that once the GST-related disruption was over, activity was bound to pick up. And we have seen in high-frequency data, particularly in auto numbers, commercial vehicle sales, for example, has been doing very well, and that is getting reflected in the capital goods production. So I think the good thing is the momentum is quite strong as the financial year ended, which means the start to the year should also be good. Hopefully this will continue, and I think we'll watch with keen interest what is happening in the capital goods segment, because if we are going to continue to see some kind of continue to see a few good numbers there, that definitely means that this recovery can really sustain.
Yeah. Actually, I mean, just because of that, capital goods at double digits for the last four months, I think. Will this change your growth forecasts at all?
At this point of time, no. See, I mean, obviously this is definitely a positive, but then there are other concerns also. One is, of course, what is happening on the global side, related to trade and even geopolitical concerns. And second is on the banking side also. I do think the kind of optimism or expectation of recovery in credit which was generated after the recapitalization of public sector banks, I think some of that optimism has faded away. So what I'm trying to say is there are risks on both sides. So at this point of time, they are not changing our estimates.
All right. We'll leave it at that. Thank you very much, Prasanna, for joining us. I think one important takeaway is that there is no takeaway for the bond markets.
Okay, all right. So at least for today, the yields don't have fresh triggers because of the macro numbers we saw yesterday. Let's take a break on that note. We will come back with the CNBC TV18 list of top 10 stocks for this Friday morning. Well, the markets have cooled off a little bit. If you're looking at Asian region as a whole, not just the SGX Nifty, overall all markets are slightly off the highs. We're still holding on to about a 10-point gain for what it's worth. So let's now boil it down to stocks. Plenty of them in news as always, and our team is standing by to run us through the list. Good morning, guys. Happy Friday the 13th for you. I hope you all have made your plans and they won't be jinxed. But we've got to talk stocks right now. Anuj, let me start with you first.
Yeah, Surabhi, before that, to all our viewers, happy Baisakhi as well. I think it's tomorrow, and we won't be working tomorrow, so obviously.
It's a happy Tamil New Year day.
Happy Tamil
New Year day to you too, Lata.
As well, to you and to all the viewers down south, of course. I think the intraday chart is interesting of SGX Nifty and Hang Seng and other markets, because we are sitting on, big rallies, Surabhi. So let's see. Axis Bank, I think, is interesting. It bounced back from 200-day moving average yesterday after one-day correction. And there's been strong delivery buying. I think the sense I'm getting is that the worst is over in Axis Bank. And obviously, there's been some accumulation on this one. And of course, on this, the news is out now. So that is the reason that it's outperformed the others. Remember I spoke about it on the day when we had that big rally on Balrampur Chini, that perhaps that was the best-selling opportunity. And yesterday, the stock hit a fresh 52-week low. And now this is how you got to approach commodity stocks in a cycle. Anytime now you get a rally, that would be an exit opportunity or selling opportunity. It's in a cycle. The cycle has turned. Go back to the previous cycle. It's headed there. And, it's in band though. So that's the only thing. But, it's obviously a stock which is going to make fresh 52-week lows for some time now.
I can go back 9 cycles. 27 years in this market reporting, and I can tell you this is an invariable cycle. Once it starts falling, it's a 3-year cycle. It's a 3-year trough and peak cycle. So, I mean, I take your point completely on that. ICICI Bank, actually, I'll take it with a pinch. The latest news is, of course, that SEBI is also investigating whether there were corporate governance lapses in that 3250 crore, whether all disclosures were made by the managing director. Now, there have been enough and more bad news that has been coming from other investigative agencies, and still the stock has held its ground. So, like Axis, since Anuj is so confident of the way Axis has reacted, I'm not very sure this will be a very big negative, because enough negative has been withstood. It's just that if SEBI is investigating, there's a turf issue here. Will RBI also move in? Because it's more so an RBI area of regulation. But we'll have to wait and see. That could be a minor negative.
Okay, so ICICI Bank on the radar as well. Nimesh, good morning. HCL Tech has done a small acquisition, 30 million, right? I think.
No, it's a $330 million acquisition.
330 million. Okay, I take it back. That's not small.
So the acquisition spree continues for HCL Tech. This is the 20th acquisition that they've done in the last 3 years. So, but the surprising part is it's a product company that they've bought this time for $330 million. The target company did a revenue of close to $107 million and EBITDA of $38 million in 2017. Now, I was looking for a few reports, and Equirus report has put out a note saying that this target company can add potentially close to 1.5% to the FY19 estimated EBITDA So, you know, it's a small addition to the EBITDA, but $330 million is what they've put for. It's a structured deal where HCLTech's contribution is 80%, and there is a PE is going to hold 20% stake in the target company. So, good deal, but surprisingly for the street, it's a product company that they've bought this time. So, the acquisition spree continues for HCLTech.
Okay. Well, I think Fortis, thank you very much, Nimesh. I think Fortis is going to be the cynosure of everyone's eyes today. A third acquisition bid, a third competitor in the fray. Aikta?
Yes, absolutely. They've received an unsolicited bid from the Hero Investment Office as well as the Berman Family Office. Currently, both of them own 3% stake. They're offering to invest 1250 crores via preferential allotment. Now, remember, it's a two-part deal, so 500 crores without due diligence immediately for the operational viability of the company, and 750 crores, which is post-due diligence. And they have said that it would be at 156 rupees per share for the preferential allotment, or the SEBI formula, whichever is higher. Compare this to Manipal, which is at 155 rupees per share in the revised offer bid. It is a completely binding offer with no element of a non-binding offer in it. So that's the difference between the two. It'll be interesting to see how things pan out going forward, Lata.
Okay, Ekta, thanks a lot for that. Fortis no longer in F&O, so shorting also doesn't happen. That also has helped over the last couple of days. Ever since the March expiry, it's been a one-way journey for that stock. But earnings will kick off today with the IT major Infosys reporting its numbers and, of course, the annual guidance, but after market hours. So the street will have the entire weekend to look at the numbers and react to that. Reema Tendulkar filed this report on what to expect from the numbers.
Yes, going into its earnings quite strong on account of the recent appreciation, but the sector per se has been an outperformer on expectations of a pickup in global growth, a portfolio shift away from banks to IT, as well as the underweight positioning of large investors in the sector, which got corrected. So Infosys per se has rallied close to about 10% on a YTD basis. The March quarter expectations on the top line, that's dollar revenue growth, is seen higher by 2% sequentially. Now Q4 is a seasonally weak quarter, but this quarter will look better on a year-on-year basis, largely on account of the cross-currency tailwinds. On a constant currency basis, we are expecting a growth of about 0.8 to 1%, which would compare with no growth in March of 2017. EBIT margins will be flat at 24.3% on a quarter-on-quarter basis. Optically, the profits will look lower sequentially, but that's because the prior quarter, that's Q3, had a reversal of an income tax provision. If you strip that out, then profits would also be on the flatter side. Now, with these numbers, the company is on track to achieve its FY18 guidance. So in constant currency, revenue should be close to about 6%. The margins should be within the company's guided band of 23 to 25%. But the key to watch, as always, will be their FY19 guidance. This will be the first guidance, coming in from the new CEO, Mr. Salil Parekh. The street is working with a constant currency guidance of 6 to 8%. Some believe it could be a little more conservative and come in at 5.5 to 7.5%. But if it is 6 to 8%, that means at the lower end, growth will be similar to what they saw in FY18, and at the upper end, which is 7.5 to 8%, there is an acceleration in growth. We'll see how conservative the new CEO gets. The other thing to watch will be the heightened management attrition that has come through on account of the management churn, the initial strategy of Mr. Salil Parekh on the capital allocation, his strategy. There will be an analyst day on the 23rd of April, so we'll get more color on that. And also on sectorally on BFS, that's banking and financial services, where Infosys has sounded more confident and optimistic compared to its rival TCS.
Oh yes, and I guess one will watch out for how long Mr. Nandan Nilekani stays as chairman. That's also another important announcement. And in any case, block deals, Mangalam, you're tracking some?
Yep, Lata, I'm tracking two block deals. The first one is Quality Limited. So that stock was buzzing in yesterday's trading session, buzzing day before yesterday as well. We understand Letco Brusso Emerging Markets Fund has bought about 37 lakh shares. Second day running, the previous day they bought about 40 lakh shares as well. More importantly, the seller, Siddhant Gupta and Siddhant Sons, they were the aggrieved shareholders. They had complained to the company that their broker had sold shares earlier as well. See some green today because of this supply overhang getting done. But for retail investors, the stock has a reputation of being very volatile. so would advise some caution there. Agrotech Foods, that's the other one that I'm watching out for. Purinju's fund, EQ India, has bought a stake in this company which runs and operates Sundrop Oil, Actu Popcorn as well as Nachos. So watch out for that. Rakesh Jhunjhunwala, he owns about 6.1% stake in the company. He's been holding it for a very long time. So see some green on Agrotech Foods on the back of that.
Okay, Mangalam, thanks a lot for that, and totally take the point on quality. I mean, just see the chart of that stock. Sometimes, you know, it's a stock where if you buy on this momentum, don't get exit. So just be very, look at that. Not something that, you know, you should be,
that a small investor can do.
Exactly. But Nigel, what about Vedanta?
Well, Anuj, they're putting some more money in Zambia. They have copper mines over there, so roughly around $700 million. So that's one part of news. But I think the focal part will be in terms of the aluminium business. They've started securing some bauxite for their alumina refinery that was running at low capacity utilizations. So that's good because they'll save some money over there in terms of sourcing their bauxite, and also they are assured of some part of their supply. So that's good news. And the other factor is that aluminium prices, they're up nearly around 15% in the last 1 week. That's what's going to support Vedanta, Hindalco as well as Nalco. So just keep an eye out. As long as these global challenges do come about in terms of alumina as well as aluminium, all these stocks could be in focus.
Actually, yeah, Vedanta hasn't moved as much as Hindalco. Hindalco's been the star of the week, so let's see if there's some catch-up game.
There's a reason for that, because zinc prices have been falling quite a bit, and Vedanta, of course, is the holding company of Hindustan Zinc.
So
and
it has
Hindustan
a mixed
Zinc
play.
has fallen, yes. So I think alumina has been the play, so that's done well. And for others, you know, because you've already rallied already, so that's why we're seeing this sort of.
Okay, all right. Sonal, good morning. Other stocks in news?
Good morning, Surbhi. Well, I'll be tracking Reliance Industrial Infrastructure because they came up with their Q4 results yesterday. Weak set of numbers, they reported a profit decline of around 65% at 2.5 crores, and the income from hiring construction machineries decreased to 25 crores versus 35 crores year on year. And a lot of launches at the Defense Expo yesterday. BML also launched medium bulletproof vehicle yesterday there, and that's why the stock will be in focus. Hudco will be in focus because the company is seeking shareholder approval for borrowing of funds not exceeding 40,000 crores via bonds or debentures, and also they have sought approval for increasing in their borrowing limits by 1 lakh crores. So we'll expect a green on that stock. Apollo Pipes is in focus because they've completed the installation of a rooftop solar plant at its manufacturing facility in Uttar Pradesh, and the current capacity is 1.2 megawatts for that particular plant. And some good news for us, as Westlife Development is introducing 7 new products during the summer season, so we can expect some more food for us and expect that stock to be in green as well.
Yeah. Okay. All right, Sonal, thanks very much for all of those stocks. Let's recap the list then for the morning. Stocks expected to open out in positive territory are Axis Bank, HCL Tech, Fortis, Quality, Agrotech Foods, Vedanta, BEML, Hudco, Apollo Pipes, Westlife Development. While stocks that could be under pressure are ICICI Bank, Balrampur Chini, Reliance Industrial Infra, Muthoot Finance, as well as Manappuram Finance. So that's how it's playing out. Pretty even, Stephen.
Yeah. I mean, I think we have to put the disclosure out also. RIIL is owned by RIL, which also owns the channel.